It's Monday, August 22nd, 2022, and it's time for this week's Real Estate Market Polls with me, Jordan Dove. Today we're going to discuss the national housing market. We're going to discuss my local market in Southern Nevada, give you a housing update. We're watching those Treasury bond yields, very important, and they do remain inverted. We're going to discuss some economic headlines internationally today, and we are watching the Federal Reserve, a little bit about what they do and not what they say. We're going to have a little review of what happened last week, and we're going to give you this week's prediction. For this week's national market update, existing home sales slipped for the sixth straight month in July. But the good news was median prices fell 2.4%, inventory continued to rise, and demand was strong, with 82% of homes sold in less than 1 month. The median existing home sales price climbed 10.8% from 1 year ago to $403,800. In July 2021, it was $364,600. That is down $10,000, however, from last month's record national high of $413,800. The inventory of unsold existing homes rose to 1.31 million by the end of July, or the equivalent of 3.3 months at the current monthly sales pace. All cash sales accounted for 24% of transactions in July. That's down a point from June, but it's up a point from July 2021. Housing starts dropped in July. Starts for single families are down 18.5% yearly, but up 17.4% for buildings with 5 units or more. Building permits are down 11.7% annually for single families, up 26.2% for 5+ unit buildings. A note from Freddie Mac says that inflation appears to be on its peak, which has stopped the rapid increase in mortgage rates. Forecasting supply will modestly increase and home price growth will decelerate. And I have some interesting international and economic notes that I would like to share with you today. The United Kingdom economy shrank a record 11% in 2020, the worst since, get this, 1709. The updated figures show today. Chinese banks cut rates to spur economic growth. The CCP wants banks to lend cheaper money to increase growth quickly. It's not looking good in China and their economic situation. It's also being reported that China is demolishing unfinished residential and commercial buildings across the entire country. In other Chinese news, spoke about them before, real estate giant Evergrande has failed to deliver the debt restructuring plan it promised, as probes from Hong Kong's audit regulator said last month it has initiated an inquiry into the financial statements of the massive real estate developer. Big things could be happening there. We'll keep our eye on it. Moving into the U.S. stock markets, tanking for the beginning of the week, with midday trading down all day, all indices closing down about 2% for the day, as well as crypto getting crushed as the Treasury bonds spike. When Treasury bonds go up, just about everything else goes down. Have you had a child recently? I have. I have 3, including one who just turned 2 years old. Here's a sticker shock if you have young children. According to the Brookings Institute analysis, it now costs $300,000 to raise a child, and that's only through the age of 17, and this is due to soaring inflation. The Institute found that the average amount a married, middle-income couple with 2 children would spend to raise a child born in 2015 through high school is now estimated to be $310,605. That's roughly $18,270 a year, and an increase of 9% from the previous estimate due to rising prices wreaking havoc on Americans' budgets. Brookings used the data from the U.S. Department of Agriculture's last Expenditures on Children by Families report in 2017, and they updated it to account for the higher inflation rates the U.S. is seeing right now. So for comparison, by the USDA's last count, the average cost of raising a child born in 2015 was $233,610. But that was with the expectation that inflation would be around the Federal Reserve's target rate of 2%. This doesn't even include the debt trap of college, so you have So if you have young children, be prepared to spend about $300,000 over the next decade and a half or so. I thought that was really interesting for all the parents out there. But let's talk about Las Vegas, where we live. Viva Las Vegas. I have a public service announcement to make. If you have tried to buy a home in the last 3 years, but you kept getting beaten by the hedge funds and their cash offers, here's what my buyers can expect in this current market. You're going to get an offer accepted under list price. You're going to get the seller to pay for your closing costs or to buy down your mortgage rate. From me with my clients, you're going to get the seller to actually make repairs or give repair credits for bad inspections. You see, many of today's agents, they got into the business over the past couple years as the market was extremely hot. They saw it as an easy way to make a quick buck. I've been practicing real estate for 8 years, and our team at Devon Associates has a combined experience of over 65 years. Many of the newer agents, they have no idea how to handle a slow market, let alone an even buyers and sellers market. And we're fortunate enough here to have a solid foundation of great people who have seen decades of market shifts, and we know what it takes for all of our clients to succeed in all these different changing markets. Some other things to keep in mind in this market is buying right now, it may be a bad choice for some of you. Even though this will cost me money, and it's going to cost me money to tell you that, I will if you're someone it will not benefit. Number 2, for those who are paying insane rent and rents are rising, buying with little out of pocket and under list price, that's going to save you money monthly. Number 3, interest rates, as you know, they've gone up substantially, but I can actually get the seller to pay for you to buy down your rate so that your monthly payment is much cheaper. If you are current or former military who served, thank you so much. If you have VA loan eligibility, now is your time. With our VA program at Devon Associates, you can buy a house with literally no money out of pocket, not a penny. And if you have any questions about this, just please call or text me. My phone number will be in the description of this video. So let's take a dive into the numbers of Southern Nevada housing market. The current absorption rate for Southern Nevada for the housing market the past 4 weeks is 22.87%, which is down 0.30% from last week's absorption rate. And for context, 6+ months ago, the absorption rate was over 100%. It's a crazy number I've never seen before. To let you know what a market absorption rate is, an absorption rate at or above 20% is typically called a seller's market, whereas an absorption rate below 15% signals a buyer's market. The absorption rate has been going down each week we run these numbers over the past several weeks. Each week we will update the current median price for the current month in Southern Nevada. Keep in mind that a majority of the properties that close, they sell at the end of the month. So official numbers will be published the first Monday of each month for the preceding month. The current median prices for August 2022 as of today are single family $450,000, that's down from July of $465,000. Condominiums $243,000, that is up from July of just south of $239,000. And townhomes $325,000, that's down from July of $329,000. The past 23 weeks in our market, we have seen an increase of residential resale inventory available on the open market in Southern Nevada. The chart I'm sharing on the screen here, it shows the total available inventory to the total weekly closed sales. Property is still trading hands, with about 2,500 closed sales in the past 4 weeks alone. Compared to just 1 week ago, our market has 136 more active residential resale properties on the market compared for a total of 10,986, which is an increase of 1.25% versus last week. The market has absolutely shifted. Properties are sitting on the market longer. April and May had a median days to sell of 9 days. To June it was 11, July 14, and now August we're seeing 17 days on the market to sell. Historically, selling a home in less than 30 days is extremely fast, and we have the tools to be able to get that done for you, okay? Homes are selling for 96.9% of the original list price for the month of August thus far, down from 101.1% in April. The good news is there are buyers looking for an opportunity right now. Okay, there's buyers looking for an opportunity, and there are sellers who are still up very bigly from the run-on appreciation we have seen over the past 2 years. So although the market is not commanding spring of 2022 sales prices, they are still at elevated levels and they're still trading hands. So if you're in the market to get your home sold and cash out, call me, call my office, and let's meet. I'd love to discuss your plan and your goals, and let's come up with a solid marketing plan that fits your needs, wants, and goals. All right? So now that we've discussed the national and local Las Vegas market update, let's review last week, and we're going to dub this the winning streak over section. Okay? So the winning streak was over. 4 weeks of stock market gains came to an end as negative economic data and hawkish comments from Fed members sent all 3 major indexes decidedly south. And we're seeing that again today at the start of this week. The housing data above and below was accompanied by July retail sales, unchanged from June, a record low read on New York region manufacturing sentiment, and growing initial unemployment claims. With all that, the St. Louis Fed president said he was leaning towards a 75 basis point or 70.75% of a percentage point hike in September, while the Minneapolis Fed president said he doesn't know if the Fed can reduce inflation without triggering a recession. The week ended with the Dow down 0.2% to 33,707, the S&P 500 down 1.2% to 4,228, and the NASDAQ down 2.6% to 12,705. Again, bond prices were hit hard. The 30-year UMBS 4.5% down to 0.92 to $100.10, appearing to stabilize. The national average 30-year fixed mortgage rate declined in Freddie Mac's primary mortgage market survey. Keep in mind that mortgage rates can be extremely volatile, so check with your mortgage professional like Chuck Barone with Right Choice Lending. Check out his videos too for up-to-the-minute information. And let's end this section with a quick little did you know. For the first time since the height of the pandemic 2 years ago, the National Association of Home Builders Sentiment Index fell below 50 in August, and that indicates that more builders see conditions as poor rather than good. Now, making our predictions this week, new and pending home sales will continue to slip. Inflation will slow a little bit. The GDP will be down. July new home sales are forecast off a bit, same as the pending home sales index of signed contracts on existing homes. Inflation by the Fed's favorite PCE prices index should be up just slightly, and the GDP second estimate is expected to show the economy is still contracting. Big meeting on Friday. We'll see what happens. And to close out this week's edition of the Market Pulse, we are watching what the Federal Reserve is doing, okay? We just told you that St. Louis Fed president said he was leaning on a 3/4 point hike at the September 21st FOMAC meeting, while the Minneapolis Fed president said he doesn't know if the Fed can reduce inflation without triggering a recession. So what are they going to do? It's just amazing. So anyways, we are going to forecast the Federal Reserve policy changing in the coming months. The Fed funds futures market expects the central bank to ease up on their rate hikes by the end of the year. Now, here's a note. In the lower chart, I'll put on the screen here, a 100% probability of change is a 100% probability that the rate will rise. The current rate is 2.25 to 2.5. After review of the Fed minutes from the last meeting, the Fed said last week that they will continue to raise rates until inflation is near the target of 2%. They said they're going to do that, but then now some of these pundits are saying, well, they're going to start lowering rates next year. What's going to happen? So based on the FOMAC meeting September 21st, the consensus is a 50 to 75 point basis hike with a 100% consensus, with the same potential hikes for November 2nd and December 14th meeting with a 72.1% and 61.4% consensus respectively. Okay, so that's it for the market update for the week. Hope everyone's doing well. Hope everyone's doing great and healthy. We'll see you guys next time. Leave a comment if you have any questions. Take care. We'll see you.